Hello, welcome to the European Open briefing for Monday, October 23rd. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. The US dollar continues to edge higher on those hopes that Congress will soon approve Trump's tax plans. We also have a weaker yen this morning, which is also boosting dollar yen. We had national elections in Japan on Sunday, where Shinzo Abe's party, or the coalition led by his party, retained their two-thirds majority in parliament, and the yen is down on the fact that Abe is supportive of loose monetary and fiscal policies. The euro continues to be weighed by rising tensions between the central Spanish government and the regional Catalan government. We had the Spanish government imposing direct rule over Catalonia following the refusal of the Catalan leader to clarify his stance on independence or the declaration of independence. And in commodities, oil has started the week on a firm note, following growing signs that the oil supply market is tightening. So let's start first with the US dollar. We can see both the dollar index and the dollar yen have been trending upwards since late Thursday last week. Dollar index is at a 2.5-week high of 93.90. Dollar yen is at near 3 months highs. It briefly broke above 114 yen early today. We are seeing hopes that Trump's tax plans, or at least some form of those tax plans, will get approved following that vote late on Thursday by the US Senate, which approved the budget blueprint for the fiscal year of 2018. That bill makes it very easy for Republicans to basically proceed with the tax cuts, because they would not require the support of the Democrats in the Senate, and all of this has boosted U.S. Treasury yields, because if they do go ahead with tax cuts, that would push up the U.S. government deficit, and also it would raise growth and push up inflation. So all of that means higher borrowing costs of, well, in other words, higher US yields. And also we do have that speculation on who's going to be the new head of the Federal Reserve, and that speculation that the next Fed chair will be a more hawkish one has also been driving the dollar higher. And of course we have US stock markets continuing to set fresh record highs. We saw once again on Friday both the Dow Jones and the S&P 500 close at another record high. So all of that has been very supportive of the dollar. But of course, the yen has its own reasons to be weak this morning, after the ruling LDP-led coalition retained their two-thirds supermajority in parliament after Sunday's snap elections, which were called by Prime Minister Shinzo Abe. And we do have another central banker's term being coming to an end, is Haruhiko Kuroda. His term will expire in April 2018, and the fact that Abe has now won another term in government means that it boosts Kuroda's chances of being reappointed, and that means more or at least ongoing loose monetary policy by the Bank of Japan. And also it also does allow Abe to go ahead with his plans to reform Japan's pacifist constitution, as well as make other economic reforms. And there is, of course, renewed optimism about the Japanese economy, apart from apart from Abenomics, is the general improving global economic outlook, which has boosted Japanese exports. So all of that has driven Japan's leading share index, the Nikkei 225, to close at a 21-year high today. And we're seeing that broad weakness for the yen also applying to the euro and the pound. We can see the euro is currently, although the euro is off its highs, it's still just about firmer against the yen at 133, while the pound is back above 150 yen. Moving now to the euro, things don't seem to be settling down in Spain because over the weekend, the Spanish government went ahead with its decision to trigger Article 155 of the Constitution, imposing direct rule over Catalonia, at least until fresh elections are held in the region. But Catalan leaders have already said that they will not be abiding by that decision, so that potentially leads to further conflict in the region. We also had regional referendums in Italy, in Lombardy and Veneto, where people there voted 90% in favor for more regional powers, though this was a legal vote, unlike the one in Spain, and it's likely that the Italian government will probably give them more powers, even though the vote wasn't legally binding. So that kind of adds to the tension, or at least to the rising political risks for the Eurozone. We, of course, have also the ECB meeting on Thursday, where they're expected to announce a scaling back of their asset purchases. That could potentially be positive for the euro, but for now, political risks are weighing on the single currency, which has dropped back below the 1.18 level against the US dollar. The pound, though, has managed to bounce back from those lows we saw early on Friday. Thursday was a not very good day for sterling because, of course, we had the EU summit where at least markets weren't too impressed with those initial signs of progress there. And also we had very disappointing retail sales numbers for the UK as well on Thursday, which cast doubt over whether or not the Bank of England will be raising rates next week. But then on Friday, we had a press conference by Theresa May at the EU summit where she did sound more positive, saying that the EU leaders had agreed on to begin internal discussions on the transition phase and the future relationship between the UK and the EU. She said there was a new spirit in the negotiations. There were also positive comments from the EU President Donald Tusk and also German Chancellor Angela Merkel. Merkel actually hinted that they could possibly start in December to talk about trade. So all of that boosted sterling, and which has managed to climb back above the 1.32 level briefly before falling just below it. It had hit as low as 1.3085 on Friday. And a quick look at oil prices. We are seeing signs of tightening market. OPEC said compliance to the output deal was 120% in September, which means that OPEC and some non-OPEC countries cut output by more than they had to. We're also seeing signs that US output has picked the number of active oil rigs. The Baker Hughes oil rig count fell once again in the week ending October 20 to 736 from 743. Also, we are seeing continued fighting in Iraq between Iraqi forces and Kurdish militants, which could lead to further supply disruptions. So all of that is boosting oil prices. US crude is up at around $52.20 a barrel. Although there does seem to be strong resistance at just around the 52.30 level, we can see that previous attempts to break past that level have failed, despite the overall improving sentiment for oil prices. The rest of the day is going to be fairly quiet, with the only notable data being the Eurozone consumer confidence, the flash reading for October. That's it from me. Thank you very much for watching and have a great day.